Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes 23rd of January. Starting off with Bahamas Petroleum, where looks like we've well and truly broken out of this triangle, which has been in place since the end of September. I suppose the top of the triangle around 2.1 pence, so that's the breakout level. We nudged it yesterday on the close. The view is that at least while we're above 2.1 pence, the top of a trend channel that you can draw from the end of September towards 2.75 pence could be on the cards, and obviously one would hope rather more, i.e. retesting September resistance towards 3.5 pence. Only really back below the 50-day moving average, currently at 2.03 pence, would be regarded as negative. You can see that both the 50 and 200-day lines are currently rising, which is as good as a golden cross and sometimes even better. Next situation is Clontarf, where you can see that the stock has broken out of this triangle that it's been in, consolidation triangle, quite a pullback obviously from the that intraday peak at the beginning of December. End of day close above the 50-day moving average at 0.86 pence today should be enough to allow the stock to at least have a retest of the December resistance area around 1.3 pence, and only back below 0.8 pence, which is the floor of the triangle, really killing the idea of a potential technical recovery here. The other point to note is that the stock is, if it closes today above the 50-day line, will be closing above a rising 50-day line, which tends to be an extra bullish momentum signal. We saw the same thing at the end of November, and there was obviously decent follow through there. So that's the type of signal that most people don't talk about. On to another challenging situation, which comes in the form of Edenville. Obviously, this has been a bit of a horror story over recent months, especially in terms of the price action, let alone the fundamentals. But looks like we've broken out of this triangle from September, also above the 200-day moving average at 0.05 pence, and a close above that today should allow the stock to at least retest the main neckline resistance zone at 0.8 pence, 0.08 pence rather. And obviously after that, the sky's the limit, or at least 0.14 pence is the limit, because that's where the stock peaked out over April, May last year. Only really back below the 50-day line at 0.04 pence would render the latest recovery attempt as yet another false dawn. Saw on Twitter somebody was gushing about the volume in Iberderma. Lots of trades apparently going on the buy side. I suppose you can see that. I think I covered the stock on the break that we had of the 70 pence area last week, but never hurts to have a look at it again. And the view at this stage is above 70p. We could still head towards 90 pence, which is the main post-July resistance. If you're cautious on the stock, maybe wait for an end-of-day close back above the 200-day line. That's just above 80 pence. But with the 50-day rising and an end-of-day close above the 200-day, it could be that after a very horrible sort of basing experience over the last 2 to 3 months, the shares could be finally on their way. That's sort of the selling capitulation that you had in November is a case in point. A lot of hype on Twitter about KEFI and its announcement today. Rather disappointing that the shares haven't made more of a breakout. I think I covered the stock earlier in the week or last week on the break of the triangle at 1.6 pence. At least while we're above 1.6 pence, we should hopefully would head towards the top of a rising trend channel from December at 2.2 pence. Only back below the 50-day line at 1.45, really outright bearish for the shares. I suppose what's coming in now is a line of resistance there at 1.9 pence, so the bulls will actually have to wait for a break of 1.9 rather than the 1.6 to finally get off the ground. If we do that, then things would be much more encouraging and perhaps point towards a target up to 2.7 pence. So 1.9 pence looks to be the level to break for KEFI currently. Stock of the day is Petrel Resources, and just for a change, it was one which was called higher in yesterday's Bulletin Board Heroes, so we're not chasing the momentum in this situation, but just worth seeing that stock filled the gap as it was hoped to do, and also hit the 50-day moving average at 12.66 pence before the slight retreat that we're seeing at the moment. But at least while we're above the resistance line breakout level, I suppose 8 pence, there could still be another attempt on pushing higher. And obviously the big target there as high as 25 pence seen in November and December. A long time since we've looked at Petropavlovsk, perhaps partly because I can't say the name properly, but POGS is what it's normally used at, normally called rather, and here you can see the shares have gapped up through former resistance at 13.4 pence. That's normally a decent bullish sign, and the hope now is that the shares could head towards the top of a rising trend channel from May at 20 pence. And that could happen over the next couple of months. This stage, really back below the floor of the rising trend channel around, let's say, 12 pence, really hurting the prospect of an ongoing recovery for the shares. Finishing off with a stock I don't think I've ever heard of before, Science and Sport, but worth looking at just because it broke a very narrow triangle in mid-month for January. Bit of a consolidation there, but a nice move above the 50-day moving average today at 45 pence. And while we're above 45 pence, the chance of at least a retest of post-August resistance at 55 pence, and obviously hoping for much more over the longer term, perhaps up towards 75 pence, which would be the top of the broadening triangle that we have there. But obviously early days yet, and the shares have to hold, or should hold, 45 pence first. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.